All right, good afternoon and welcome to the end of day review for Friday, November 11, 2024. Normally, we do this recording right after the markets close on Friday or in the evening, but today for this episode, we do on Saturday. So, just a heads up right there. All right, on Friday, we have the low to medium impact. That's the PPI data. CPI come out on Thursday, October 10 at 8:30 a.m. and then the PPI come out on Friday. So the markets also react. They reject a huge, data, not data, but liquidity injection on Thursday and then Friday. So we have lots of beautiful move right there. So we close a week a very interesting move. It will look all right. So before we go to details, keep in mind that we are in week 41 and it's the first week of the fourth quarter for that matter, and we are exactly right here. All right, so the PPI, CPI data right there, Wednesday and Friday. The next month, the CPI gonna come out on November 13. So some month is it fall on Wednesday, some month it fall on the Thursday. So right here you see that the next release gonna be November 13 for the CPI, and on December it's gonna be December 11. So right here is Wednesday. So basically it's the second Wednesday, right? But for the October it fall on Thursday. We don't know. Maybe because of the first month of the quarter, right? That's right. The first month of quarter. Let's see if that's the case. So, but anyway, that's a minor detail right there. All right, now go into the daily. We see right here. Keep in mind, here's the daily chart, and we identify the range on the daily chart right here. You see the range, and we anticipate how we're gonna break out the range right there. So basically, the range is right here. So this range right there. The high of this is 57.37. Yeah, 57.37. So that is the range we identify that the markets have been moved about that range for about 10 days, 2 trading week right there. You see that range, it create that range on September 19. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 14 trading day, and then this week it start breakout right there. So we see that on on Monday is it tried to break this trend on Monday. You see, there's a Dow close, and it tried again on Tuesday, and it reversed. And then on Wednesday we have a follow through there right there, follow through there, and then the CPI come out. It retraced Monday a little bit, and then Friday is go back to the rally. So basically, we saw that it break out this level right there. You see that it break out this the high of this range with a fair value gap. You see that it may retest the fair value gap and boom and make another leg up That's what we anticipate. But right here, you see that this is a reversal right here. Right after the reversal, what we're gonna have? It's gonna go into retracement. Exactly, retracement and consolidation. Retracement goes back to consolidation, and then consolidation we have an expansion. It's gonna be a leg up, or it's gonna be reverse. In this case, it quite look like that it's gonna be a break up, or it can be a full breakout of the level. So basically on Friday we anticipate it's gonna be full breakout. You see that? It break and test from above, and then it's gonna be reversed. That's what we anticipate, but it flipped. It is flipped on the London, after London, when it go into the PPI data released 8:30, it flipped. So it's just watch out. It can be a second leg up, or it can be full breakout around here. So we have to watch for next week or so. Let's look at the setup that we are trading. Yeah, here's the model for the reversal that we simplified and we built them. It's our playbook for Taiwan reversal right here. So basically, you see the level right there. It break, test from above, and reverse. And we anticipate right there. You see that? Break, test from above, and reverse. You see that? However, it failed to reverse on Friday. So let's see. Let's see if it can give us, that's the first signal give us that it's gonna make a next leg up, or it could be a false signal. So we still don't know for sure. That's the beauty of trading right there. You don't know for sure. We have to go with the uncertain right there. All right, that is our daily time frame right there. And now we go to the 15 minutes chart, our favorite chart right here. So here's the Friday. All right, so here's the Friday right there. It's basically the day before. On Thursday we have CPI data right there. It set a huge range, and basically in the PM after that it's still in this range. London still in this range. You see that? But you start see that right here, it reversed right here. It goes to expansion, retracement, expansion, and then retracement, and a huge expansion right here. So we took the trade right here, but you know what? We get a little bit nervous. We get out from here. This in the real time, it kind of look very scary, so get out. Otherwise, we let it run. We get 3R, more than 3R, but we got out. So that's the lesson we learned. Here's our screenshot. Beginning of the day for that day. Let's pull our screenshot real quick. So here our screenshot, we took beginning of the day. BOD stands for beginning of the day, October, and we took screenshot at 8:25. Exactly, it's 8:23 right here. The timestamp right there, just before they release the PPI data on the 5 minutes, 8:30, and you can see that it could be a type 1 reversal right here, full breakout, right? Break, test from above, and reverse. So that is one of the setup that we anticipate right there. You see that? Break, test from above, and reverse. Exactly. Right, test from above and reverse right there. But it didn't happen, so that means the reverse failed. So it's gonna be continue break away from this level. So it's a pure breakout on that level instead of full breakout. That's what we see, after the 8:30. Before 8:30, we thought it's going to be a, type 1 reversal. But after the 8:30 on Friday, it continued rally. So basically the reversal fell. Right here, you have the reversal step. It fell. It did not reverse. We thought they're going to reverse, but boom. It goes to the real breakout, not the full breakout. So that is the screenshot we take before 8:30. And here's our analysis at that timestamp right there, 8:25, 5 minutes. So basically we see that, all right, so right here is a reversal right here. And after reversal, it goes to retracement and then expansion, and then it goes to retracement right here, and then it turns to, reversal, and then it goes to right here is a consolidation. And after it comes to consolidation, it goes to expansion, retracement, expansion. Then right here, it goes to expansion, and then here it can go to what? It can go to two possibilities, which is retracement and the retracement, and it goes to expansion. But if a retracement turns into reversal, then it's going to come down here. That's two scenarios right there. So let's take a look. We will always go back to this, ACT price delivery model for stay right here. It's very critical for us because we understand, the more we understand this process or this model, the better for it to read the price action. So we need to practice every day. So this become our second nature. It become like we know it like in the back of our hand right there. So basically everything starts with consolidation, and then from consolidation you go to expansion. Expansion, it goes to retracement, and if retracement fail to make another expansion, then it's gonna go to reversal, and then reversal 99% it goes to consolidation, or it can go retracement and then make an expansion. So that's the whole idea right there. So that's, we try to annotate right here. We try to read out loud the liquidity run from the algo right there. So right here we anticipate going to be retracement. It will not consolidate. You see the expansion right there? It will not consolidate. It's going to be retracement, and boom, it's going to be expansion, or it turn into reversal. So we have to watch for the setup. All right, so that we took the screenshot at a 25, right? And now just take a look at right there. So that means that it can expand. You see that? The retracement, and then the signal about 3 minutes into the candle at 8:30, which is the Kisses, it's not 8:30. 9:30 right there. So at 8:30 it tells us that it's still in the retracement right there. It take the buy side, and also, but it did not take the sell side of this. But then you see the retracement, and then it's gonna be exactly the expansion right there. So 3 minutes into the 9:30, we see that it make the extension, expansion right there. The question is, will we gonna go and get all this buy side liquidity? That's the question we have in mind at that moment. And now go to the next. So we see that at 10:15, it really make the expansion right there, a neck leg up right there, huge neck up. It caught a surprise, but we did go in right here. All right, in new trade. We did two trade because we saw the retracement right here, and in the real time it looked like it's gonna be reversal, but it flipped. So we go at 9:30. Here's the real time at 8:30. Let's see. You see right there? You see that? It came down. You see the first minute. You see the real right there. Yes, you see the flip right. We thought it's gonna be break this level at 58, 24, 50 right there. So you see that test from above, test from the above. We thought it's gonna break it, right? That's the reversal type one right there. You see that? Break it, test from above, and then reverse. In this case, it test from above 1, 2, 3, and this time it's the fourth time I thought it's gonna break. But if reverse, that means that the retracement is end, and after retracement, it's gonna go to expansion. So right here, you see that after retracement, and it failed to go jump to reversal. Then it goes back to expansion right there, which is the next click up. That's the logic for ICT price delivery model right there. That's how the algo run. Right. So right here, retracement right there and expansion. Then our question is that what level liquidity that it's gonna run. So it's gonna run and break out what? It's gonna break out this range right here. The range that is set on Thursday on the CPI data release at 8:30. So there. That is the range it's gonna break. That's the brand it's gonna break. Yes, so we take that. That's explosive move right there. Next leg up. Yes, next up right there. Let's take a look at the trade we took at that moment. Oh, right. Here's the recording we booked right there. So right there at 9:30, you see that? No, not 9:30. Before 9:30, we thought that it's gonna be a short setup. You see that a break, and it tests from above 1, 2, and we thought that it's gonna be break that level. It's gonna be a type 1 reversal, so we go short. That's perfect. However, now look back, we have to see that how it break. If it break in this, in the consolidation, then there's a valid setup. But it break in a expansion move right here. You see the pattern right there: expansion, retracement, expansion. So this should be another what? Another retracement and expand. And the candle right here gives us a signal test from below. Then it's gonna explosive move up. That is go into the types. It also it means that it's a type type 1 reversal. A test from below right there. You test from below, it break, and test from below, you're gonna reverse. Basically, the retracement gonna end. It's not gonna turn to reversal. Boom! It's gonna explosive. So we saw them right before 9:30. So we saw them at the candle 9:15 right there. Okay, so after that, all right, at about 9:22 or so, we feel like not working, so we go in and short them. Perfect, short them. Okay, but it flipped. You see that? It flipped. Then we got scared. We thought, wow, we're gonna break it. Right? The level right there, you see that? Test from above, and gonna break it. So I think we got out. We should have stayed in the trade, the short trade right there. So we just closed the trade. We turn into short position. Yeah, we short them. Yeah, we should not do that. You see now it goes to 930 right there. We short them. We should stay in the long position right there because we have a stop loss below this. And you're going to see the flip, but it's okay. It's okay. And we see, wow, it not short, it flip right there. And we go in and we go
Order
long.
filled.
Perfect. We go long. Perfect. And you see that right here, it huge. All right, and we have, more than almost 2R right there. You see right there, it's 2R right there. Yeah, 1R is 250, so 2R $500 right there. But then right here, it really gets scary right there. We have 600, almost hit 3R first. But here's the thing happened right here. Boom, you see that? We got scared. You see the flip really was so scared. So we, oh yeah, right here, we make a mistake. We should let it run. You always have a pullback. We have to stay through the pullback. Don't get nervous and got out of trade. That's the mistake we make. So basically, we got out of this trade. You see that? I think we close. So retracement expansion, and we have to stay in the conviction that the expansion gonna take this buy side liquidity. The retracement is for to go in and add more instead of get out. See that? We get nervous, and I think we get out along and we go to short. You see that? We click close.
Order filled. Order filled.
And then we increase size, we short them. That is a terrible mistake we make. We should not do that. Right here, we need to add into position long instead of get out the long and go short. And we go short, we increase the size for short. That's totally messed up right there. Because the expansion have not finished. It need to take the liquidity out here. We got so caught up in that moment and we forgot the bigger picture. The bigger picture that it's gonna take all the liquidity by side right here. You see that? Huge. That candle, the pullback right there in order to explosive. So we have to add more in long position when the pullback instead of getting nervous and close the long position and then go short but go very big. That's the FOMO trade right there. That's the FOMO aspect that we need to improve our psychology right there, psychological issue right there. So, and in order to do that, we have to understand very well the ICT price delivery model to see where the liquidity are gonna run. Where is the draw on liquidity? That's another term for that. Basically, where it's going to. Because after the retracement, it's gonna go to a expansion. Like this signal give us it's gonna be explosive, and right here 930 it flip. So it gives us a very good idea right there. Let's take a look at the node we have. Yeah, this node we have is after that move, so it's expansion right here, the next leg up right there. Yep. Yeah, so basically we make a mistake right here. We should stay in the long trade and then add right there. When it retrace good. It gives you opportunity to go long right there, but because of the FOMO, we misread the market. We misread the price action. The Dow close candle is time for it to add, not to get out. Depending on contact. So if we're under the contact right here, the expansion, this expansion have not finished. But if we are aim for low hanging fruits, then just M right here at the buy side of the candle, then get out and wait for retracement, go in and buy for the next one. Yeah, so we have to learn better to execute this trade. So let's say that if we are going right here, then our low hanging fruits have to be at the buy side. Because after it breaks this buy side, we're gonna retrace. That's the beautiful lesson we learn. Look at the tape. All right. So if we go long right here, then our target have to be right here. If we just aim for low hanging fruits, and then we get out and watch the markets, that's much better for us. And get out and then watch the markets. If it fell to reversal retracement right here, if retracement makes sense, then we can go in again, go long again. That's the beautiful lesson we learn. So let's say we go in right here at 24 and 37. So it's about 37. So about 13 point is more than 2R, almost 3R, right? 2 more point, it will be 3R right there. You see, we go in right here, we go 27, but if we go early right here, we have a about 12 point right there. Perfect. So that's our whole low hanging fruit right there. Just get out from there and then wait. If you see if retracement here or reversal over here, if flip, then go in and then next target gonna be this level right there. So that's a huge lesson learned for right there. We need to aim for low hanging fruits, or if we're gonna aim let it run, then let it run. Don't let the retracement scare us and get out of the trade maturely and go to short them. That's a big no mistake we make right there. But anyway, where we make mistakes, that's where we learn. And when we learn, we're gonna improve it. So anyway, we learned the lesson that we have a good entry, but the execution is not that good. We should let it run. The retracement should not scare us. Excuse us and get our trade too early. That's the idea right there. All right. Another huge lesson we learned that. All right. Whenever we see the huge expansion move right here, like what the tap right here, right? You're gonna see that the huge expansion move. Let's forward a little bit. Yes. So what we see, so the huge expansion right here at this candle, then let it follow through with this candle. So about 2 or 3 candles, and then we anticipate a retracement. Yes, so right here, let it make the move. Yes, right here. All right, let's right there. So I think we did go short right here because we see that the market, the price show curve exhaustion right there. So if we short right here, we're gonna aim at this low of the candle, the buy side right there, the sell side. You see that? Exactly. And the next question for us, it is gonna reverse from here. The answer is no, because after the huge expansion, it will not reverse. It will make retracement and then expansion, try to make another leg up, and if it fell, it make retracement again, and it make another expansion to take the buy side. As soon as it take this buy side, it will reverse. That is the the algorithm is programmed to run that way. I look right here. So you have huge retracement, huge expansion, right? Remember, the keyword is the huge expansion. If the huge leg up, leg down, it will go to retracement. It will not go to reversal right away. Why? Because that's not enough liquidity to go back right away. It have to do a retracement in order to trap liquidity so it can go back. You see, it cannot come back right away because, the algo run too quick, too fast. Not enough sell side liquidity right here. So it have to be, right here, you see that it's consolidated. So if you go late short right here, you're gonna pay the price because you see that? Look like gonna break down, right? But you see it's gonna pull back. It's gonna pull back. You see that? And yes, and mark the low of this candle. It will sweep this sell side liquidity on the next move. You want to see the next move. So basically it's retracement and we're going to make another expansion. Exactly. Expansion. Alright, but that's expansion failed. Then it's going to make a retracement again. Look like this. And look for right there. Look for the flip and yes, right there. Beautiful. So whenever you see this, that means it tests from above, then it's gonna reverse. It's like the type 1 reversal we have right there. You say break and test from above, that is gonna reverse, gonna come right here, which is a second leg down right here. So retracement, expansion right here, and it's gonna go to retracement again. It's gonna take the low of this candle. So we basically understand the algorithm. Yes, you see that? You're gonna take out this low, the sell side right there. Exactly, you see that? Look at that. Look at that. And then boom, it's gonna reverse from here. I think retracement, expansion, retracement, and then it reverse from here. So it finished, look like it's gonna come down. You see that? Look very come down. Whoever goes jumping and short right here, FOMO, we got stop out. Yes, look, boom, it did hit this level, by the way, before it reversed. But for sure, it hit the, yes. So basically, we can go long from here. Go long from here. It's gonna go what? It's gonna go into this level right here, the level that is break down right there. And you see, we can go along right there. Look, exactly. Yes. We did go along here. When we see the flip, we did go along right there. And we take our profits at a low hanging fruit at that level. But you see right here. Yeah. But don't short right here, yes. It have to sweep liquidity right there. If we short right there, you see that there? It looked like it's gonna break, but it did not. The trap is set right there. Don't short them. You can go along right here and aim for that liquidity. Boom! As soon as you take out liquidity, you're gonna see. Yes, you're gonna see right here. It's exactly at 12:30 right. Not at 15:30. You're gonna see boom boom. It's gonna reverse. As soon as we see, it's gonna reverse. Yes, you see that? It looked like it's gonna go up, but no. That's the trick right there. We quite understand now. You see that? It may go all the way here, but at least it's gonna touch this. The low right there. Yes, it touched the low right there. The range right there. That is the liquidity, draw on liquidity right there. Yeah, it did test the low of this range. You see that? At that low right there. So basically, we quite Yeah, here the trade we take at 1406, which is 14 candle right there. So we aim at the high of this candle. I mean, we can aim all the way there also, but we just aim low right there, low hanging fruits right there. So it's the key that we need to understand how the algo runs, so we know that should we stay in the trade long enough, or should we just aim for low hanging fruits, because we know that you're not gonna let it run, because as soon as it raise, this buy side is gonna reverse. So that's because we aim just for that liquidity, and it hit. Yeah, we just aim at
Order
it
filled.
right there, right? I did break the trend of this candle right there, and we got a target hit right there. So basically we aim at this the net level right there. So it got hit right there. Yeah, the level, you see that it hit. As soon as it hit, it retracement. So if we don't check the the low hanging fruit fabric, we get a big trouble right here, because going right here, right? So it retracement, it will take our stop loss right there. So very tricky, very tricky. You see that huge, huge flip right there, but as soon as it take the buy side, it reverse. So that's the huge lesson for right there. We understand now how it draw on liquidity, retracement, expansion, huge move right here. It will not reverse. It go to retracement, and then it make not expansion, and then it's gonna be reverse. Yeah, that's the huge lesson we learn. Yeah, let's take a screenshot of this, so we kind of put a write up for Friday. Let's take screenshot right here. Yeah, we took a screenshot and put some write up right here. So basically we have the retracement right here, and then we have expansion. And after a huge expansion, it will go to retracement. It will not go to expansion. So you have retracement twice. You have retracement right here. Right here you have two leg retracement right here. Where are we gonna put that? Okay, so yeah, you can put right here retracement and another retracement. So it make a retracement, two leg retracement right there. And then it make, after retracement, it go back to expansion, and then it gonna reverse right here. It's gonna reverse. That's how the market run. Remember, after the huge expansion, it will never get into reversal, because that's not enough liquidity. You have to trap the liquidity. Yeah, let's finish this up, the write up, and then we can conclude our recording for this episode. So you have what right here? That this is our starting bond, right? The pickup right there is a retracement. You see the expansion right there, and then retracement. After retracement, we have a huge second step right here. It's expansion. Yeah. The keynote right here, that after a huge remember, after huge expansion, it will never go into consolidation. Remember that. It will never go. It have to go to retracement. The only way it have to do is have to go to expansion. After the huge expansion, let's put the note right here. In this case, it's a huge leg up, right? Huge leg up, huge expansion. It will go only to retracement. Not reversal, okay, nor consolidation. That's just the key right there. It will never go to consolidation. It may, but you know, the likelihood is not. Yes, so that's the node right there. And then right here we have this step is tree retracement. We can note right here it's a 2 leg down. Only make 2 leg down, or maybe just one. A 2 leg down retracement. See that? Yes, a 2 leg down retracement. Look spell right there. All right, so it's a 2 leg down retracement. And that's we gonna make a expansion again, and this expansion also have 2 legs right there. Expansion, retracement, expansion, and then reverse. So we have number 4, which is expansion. It's a 2 leg up. You can see that it's very small leg right there. Boom, retracement. Boom. This 2 leg up, right? 2 leg up, yeah, 2 leg up, expansion. Is that right? Yeah, 2 leg up, expansion, and then it will go to reversal. Or as soon as expansion, it took out the liquid out here, it will reverse because there's no more liquid up there. I think it's called number 5, to reversal. So that's the key for to understand the draw on liquid right there. Yep. All right, let's save this. All right, we just save it right there. So we have it in our playbook right there. So retracement, heel expansion, it's gonna go to retracement, 2 leg down retracement, and then it's gonna be expansion to get to rate the buy side equity and then reverse. So if we trade this move, our target have to be right there, and then as soon as hit target, we're gonna reverse. You're gonna reverse. We can short them. Don't short down here and let it run. It can come back and buy it right there. You just make the second leg down, take this sell side liquidity, and then it's gonna make a expansion move. So all right, thank you for your time and interest. We're always grateful for this opportunity. We do what we love, and success is coming our way. Day by day, little by little, we're getting better and better. Thank you, and see you next week.